Yes, Minister.
This directive comes from Brussels, saying that all EEC members must conform to some niggling European word processing standards. That we have to agree to the plans of masses of European word processing committees at the forthcoming European Word Processing Conference in Brussels. Well, say something.
Yes, Minister.
Quite so. Is that all you want to say?
Well, Minister, I'm afraid that is the penalty we have to pay for trying to pretend that we're Europeans. Believe me, I fully understand your hostility to Europe.
I'm not like you, Humphrey. I'm pro-Europe. I'm just anti-Brussels. I sometimes think you're anti-Europe and pro-Brussels.
Oh, Minister, I'm neither pro nor anti anything. I'm merely a humble vessel into which ministers pour the fruits of their deliberations.
Humble vessel.
But it could well be argued that given the absurdity of the whole European idea, that Brussels is in fact doing its best to defend the indefensible and to make the unworkable work.
That is simply not true, Humphrey. Huh? I don't want to sound pompous, but the European idea is our best hope of avoiding narrow national self-interest.
That doesn't sound pompous, Minister.
Good.
Merely inaccurate.
Listen, humble vessel. Europe is a community of nations dedicated towards one goal.
Oh.
So may we share the joke, Humphrey?
Oh, Minister. Now, let's look at this objectively. It is a game played for national interests and always was. Why do you suppose we went into it?
To strengthen the brotherhood of free Western nations.
Oh, really? We went in to screw the French by splitting them off from the Germans.
Well, why did the French go into it then?
Or to protect their inefficient farmers from commercial competition.
It certainly doesn't apply to the Germans.
No, they went in to cleanse themselves of genocide and apply for readmission to the human race.
Never heard such appalling cynicism. Well, at least the small nations didn't go into it for selfish reasons.
Really? Luxembourg's in it for the perks. The capital of the EEC, all that foreign money pouring in.
Very sensible central location.
With the administration in Brussels and the parliament in Strasbourg. Minister, it's like having the House of Commons in Swindon and the civil service in Kettering.
If this were true, why would the other nations have been trying to get in?
Such as?
Well, take the Greeks.
Actually, I find it difficult to take the Greeks. Open-minded as I am about foreigners, as you both well know. But what will they want out of it? An olive mountain and a Retsina lake.
I just don't accept any of this.
Oh, I'm so sorry, Minister. I suppose some of your best friends are Greeks.
No, very dry. The trouble with Brussels is not internationalism, it's too much bureaucracy.
But the bureaucracy is a consequence of the internationalism. Why else would there be an English commissioner with a French director general immediately below him and an Italian chef de division reporting to the Frenchman and so on down the line?
Oh, I agree.
It's like the Tower of Babel.
I agree.
No, it's even worse. It's like the United Nations.
I agree.
Then perhaps, if I may interject, you are in fact in agreement.
No, we're not.
Brussels is a shambles. You know what they say about the average common market official? He has the organising ability of the Italians, the flexibility of the Germans, and the modesty of the French. And that's topped up by the imagination of the Belgians, the generosity of the Dutch, and the intelligence of the Irish. It's all a great big gravy train.
What do you mean?
They live on champagne and caviar, chauffeur-driven Mercedes, private aeroplanes. Every one of those officials has got his snout in the trough. Most of them have got their two front trotters in as well.
Oh, Minister, I beg to differ. Brussels is full of busy, hard-working public servants who have to endure a lot of exhausting travel and tedious entertainment.
Oh, terribly tedious. Working their way through all that smoked salmon, forcing back all that champagne.
Well, in any case, Minister, I think you're blaming the wrong people.
And that, listener, was from the 1970s, the classic sitcom Yes Minister, and it was Yes Minister's guide to the EU, or in those days, the EEC. The thick of it, of course, was the classic series in recent years, starring what's his name that became Doctor Who. Absolutely fantastic character. Obviously, I can't repeat a single one of his lines, but Yes Minister was the daddy of them all, of political comedies. It broke the mould, and it was the funniest thing since sliced bread. Certainly at least as funny as Monty Python in those days. And, well, you can see how intelligent it was. If you get a chance, go and Google some of the scenes on YouTube. They are as relevant today as they ever were. Good morning, good evening, good afternoon, and welcome to the Booms and Bust Show. My name is Jonathan Davis, and it is actually a very late, circa 4:30 p.m. in the afternoon of Monday, the 24th of July. Why is it so late? I hear you all shouting at your mobile devices, at your computers. Of course you're all shouting it. I can hear you. It is so late because I was putting the finishing touches to the Booms and Busts report, which I have now sent out today. If you're not getting the Booms and Busts report, you do want to. The one I sent out today is an absolute doozy. So get me your email address. You can direct message me, perhaps at Booms Busts Show. That's the Twitter handle. You could email me at jd@theboomsandbustsshow.com. I will put you on the list. You'll start to receive the Booms and Busts report. I assure you, no one else gets your email address. You'll never be junk mailed. You'll never be approached by anyone, including my firm, apart from with the Booms and Busts report. Therein, there is a very wide-ranging presentation of where we've come from, where we are, and where we might be heading. And if you haven't been receiving the Booms and Busts report, I suggest you do. Look, if it's not for you, fine. Just unsubscribe immediately. No worries, no hassle. Really, it's not an issue. But I am told by many people that the Booms and Busts report is worth reading. Both, indeed, by interested parties, just amateurs looking to develop their retirement funds, as indeed part of this show is all about, and indeed professionals tell me they get a lot from the Booms and Busts report. The Booms and Busts show, which is what you are now listening to, is a podcast about free market capitalism. And it's about libertarianism, because the two things go hand in hand. Freedom is capitalism. Chains and slavery is socialism and cronyism. I saw someone tweeting today that socialism is obviously bad, but fascism was a different type of bad. No, they're both the same. They're all on the same spectrum of reducing our liberties and an elite or a central government forcing us to do what they want us to do. Some very intelligent chap I watched a YouTube of over the weekend, and I'm trying now to remember it. I didn't put it in my notes. It's just come into my head. I'll see if I can remember it. If you ask a socialist whether or not they like the government, do they trust the government? Well, they're going to say, no, of course I don't trust the government. So then what you do is ask them, then why on earth do you want it to be a bigger organization, a bigger entity, take more and more control of our affairs? The solution is smaller and smaller government. And if I remember in the next show, I'll talk about what are the three primary tasks of a government. There really shouldn't be much else. On Friday evening in Israel, a Palestinian knocked on the door of a residence, a normal family, who were sitting down to celebrate the incoming Sabbath, Friday evening. The family let him in because he wanted a drink of water. Then he killed them. There was no clash. There was no police. There was no army. There was no threats by the nasty Israelis to the poor, impoverished and enslaved Palestinians. He killed a family sitting down for the Sabbath meal. You know where this killer is now? He's recuperating in an Israeli state paid for hospital. This is what Israelis do to murdering, barbaric Palestinians. And that is what murdering, barbaric Palestinians do to Israelis. I remember a few weeks ago on Twitter, I was having a mini debate with someone. I asked the question, as I sometimes do, and sometimes socialists respond. I asked the question, okay, can you give us one example of a socialist country, any time in history, anywhere, that has actually been good for the people? Now, do you know what the answer always is that they give? They always, and I mean always, because it's the only thing they can think of that comes remotely close to the truth. The only answer I've ever received, and I can understand it, is or are the Scandinavian countries, or they might say Sweden. Now, the first point to note is there are no other examples in history across the planet Earth when socialism, communism, fascism, Marxism, you name it, it's all the same thing, has been good for the people and created sustainable prosperity for the people. Not one example. The one they give, the only one I ever receive, is Scandinavia / Sweden. It's an absolutely rubbish argument. These people don't know the first thing about socialism. The reality is that although the Scandinavian countries have high taxes and therefore high spending as a percent of GDP, the reality is that they have for decades been amongst the most free market in the world in terms of their business practices and their government's involvement in our affairs. And here is a fact. This is from the World Bank. And within the top 10 countries for the ease of doing business 2017, I'll tell you first of all what number 1 is: New Zealand. Number 2, Singapore. Both of those you wouldn't be surprised to hear. You might be surprised to hear Denmark, number 3. Norway, number 6. Then you've got the UK and US, 7 and 8. Sweden, number 9. The Scandinavian countries, listener, are as socialist as Maggie. So the next time you ask the question of a socialist, can you tell me any country, anywhere in the world, at any time in history, that has actually been good sustainably for the people, and the answer is Scandinavia or Sweden, you repeat that to them. Denmark 3, Norway 6, Sweden 9. I had a follower on Twitter ask me over the weekend, why is the dollar going down? And I'll be talking about the dollar when I come to markets in a few minutes. And what I actually said to him was, who cares? Forget the why, only focus on the what. Now, you're probably wondering why I'm laughing. Because when I say the what, I mean what's happening to the price. Is it going up or down, or is it flat? What he came back to me with was, okay then, what is the reason for the dollar going down? He didn't understand what I was getting at. So I clarified for him, and I said, well, I said what I just said to you. Forget why. It is not going to help you to know why. And this is something that I've been telling my clients for years. There are economists out there, there are politicians, there are pundits, there are media people who give us reasons why something is happening in markets. And the reality is that half of them are right and half of them are wrong. But they're brought in to make a quote in the newspaper or the journal, to do a face to camera thing, to do 2 minutes in the radio. This is happening because, and by the way, I wear red braces, I wear a bow tie, I wear red glasses, and I wear a suit. In fact, when I want to be really serious, I wear a 3-piece suit because I want you to believe that I really know what I'm talking about. Half of them have got something to say and half of them don't, but all of them are there for their agenda, whatever that is. Whether it's to get new investors, whether it's to get advertising, whether it's to get new audience, whatever. Everyone's got an agenda. This is one of the most important facts you need to know about the financial media. I could give you a number of reasons why the dollar is going down, and half of the reasons will be right and half of them will be wrong, and I don't even know which of them are right or wrong. And in 6 months or a year's time, we probably will know the reason. But that's the point. Even in the future, we won't know exactly why something happened in markets. We don't know all the facts of what's going on out there. We haven't the faintest idea. That is the reality. So the next time you hear an also intelligent Oxbridge graduate or a Harvard or Yale graduate telling you about this or that, this is the reason why this is happening, take it with a huge pinch of salt. Only consider what, not why. Well, happy birthday. Admittedly, it was a couple of weeks ago, in fact, nearly 3 weeks ago, the 5th of July. The 5th of July 2017, 10 years since the Bank of England last raised interest rates. Since then, of course, there have been interest rate cuts, massive quantitative easing, bailing out of banks, essentially zero prosecutions for banking criminality. You think we don't live in a fascist state? Think again. Talking about the fact that it's 10 years since the last time that interest rates rose, I point out to you again that if you, on the Twitter feed at Boomsbusts Show, you will see the tweet, the iTunes tweet of the show. Open it up, scroll down. I'll ask you in the next tweet to please go on to iTunes and review the show. I will invite you to subscribe to the Booms and Busts Report, should you wish. Then, following all that, you will start to see charts and pictures which relate to what I'm talking about in the show. And look at that amazing Bank of England chart. The purchasing power of a pound over the last, I'm trying to work it out, is that, 350 years. 350 years. Do you think that's a lot of data that we can take note of and probably use it quite effectively? Before I talk about the chart, I can remember as a kid watching all kinds of movies, whether it was, let me think, Robin Hood, Oliver Twist. Did I watch Jane Austen as a kid? No, I don't think I did. But you get the point. And I was always befuddled. Why, if something was taking place in the 11th century, or the 15th century, or the 18th century, why everything was a penny? I could never understand why the price of stuff didn't change. Look at the chart. From 1661 to 1895. So what is that? That's 230 years. The price of money was unchanged. Sure, purchasing power went up for about 100 years, and then it went down for 60, 70 years, and then it went up again for 70, 80 years. Over 230 years, the price of pounds, the price of money, was net unchanged. And I didn't see a chart of that until I would say about 10 years ago. And throughout all my childhood, teenagehood, 20s, 30s, early 40s, I always had it in the back of my mind, how come everything was a penny for hundreds and hundreds of years? And it's a fact. The price didn't change. Whether it was bread or beer or clothes, it was all the same price for hundreds of years. Now, of course, only the select, relatively small percentage of people actually had any money. Everything else was barter. But that just showed you. And then look at what's happened in the 20th century and the 21st century. Look how the purchasing power of the pound fell from 90 pence to a penny in roughly the last 120 years. And more than that, look how it fell from 50 pence to a penny since, well, 1939, 1938. Frightening, isn't it? And if you were to focus in on 1976 to now, which of course is the last 40 years, it wouldn't be flat like it looks there. It would be a very steep decline indeed. And that, of course, is because we lost gold as money. So that's pretty fantastic in a negative kind of way. But it just shows you how we're all being taken for an absolute ride. And I think I showed in a chart in the last couple of weeks how the bottom 60% of earners in the US, but it'll be the same for the UK and right across the developed world, the bottom 60% has seen the real value of earnings, the inflation-adjusted earnings, either flat or falling for now getting on for 20 years. So as well as the costs of living soaring, particularly accommodation, which of course is not in the inflation indices, as well as that, are the bottom 60% of inflation-adjusted earnings have been flat or falling. The majority of folk are absolutely being taken for a ride. And the difference, of course, is made up by debt. People are just so incredibly stupid. Let me tell you the story of a turkey called Gobble Gobble. Gobble Gobble was born about 3 years before Christmas. In fact, 1,000 days before Christmas. And if you were to index on a chart, starting from an index level of 100, his starting life is really quite comforting. And particularly if he's a free-range turkey, he gets to waddle around, pecking at seeds, having a chat with his mates, having a look at the world for 1,000 days. And his quality of life just improves. He's fed well, he's comforted, he's looked after in the winter. His index just keeps on rising. Until a day when his index falls to 0. And that is, of course, a few weeks before Christmas. And this is a highly relevant chart, actually, to investing. Complacency is a killer. And when you get complacent in investing your retirement funds, just remember Gobble Gobble. You never know what's going to happen tomorrow. Now, I believe I've sometimes used the phrase, the economy is not the markets. And I've actually used this in the Booms and Bust report that I sent out today. Did I mention I sent out the Booms and Bust report today? Only 1,000 times. And it shows Venezuela's GDP, the first chart there, that from 2010 to 2014, in dollars, US dollars, the GDP of Venezuela literally halved in 4 years. Halved. Can you imagine that? I mean, you think Greece is bad? And Maduro, the fascist communist running Venezuela, decided to stop producing national economic statistics in 2015. I talk about 1984 is alive and well. And the next chart shows Venezuelan inflation. It's currently up to 700% per annum. And the IMF, in their infinite arrogance and stupidity, they say that it's going to go above 3,000 within 3,000% within a couple of years. Well, you know, that of course assumes that nothing changes. Not that 700% or 3,000% makes the blindest bit of difference to 85% of the poor Venezuelan population. Anyone who doesn't feel for the people of Venezuela doesn't feel. But you know, 15% of the Venezuelan population are living at large, and the top 0.1%, Maduro is not a particularly wealthy man. He's a multimillionaire. He used to be a bus driver, you know. They earn a lot of money, obviously, driving buses in Venezuela. Obviously, because how else would he become a multimillionaire? No, but, you know, it's obvious that his daughter, who's now in her late 20s, by the way, Maduro's been around for a long time. And before that, Chavez, his best buddy. His daughter must be the brains in the family because she's worth $4 billion. It's funny how that works in a socialist, fascist state, isn't it? While 85% of the population have no medicines, no toilet rolls, no food, nothing. Welcome to socialism and fascism in the 21st century. The next chart shows government debt per capita. And unsurprisingly, Japan has the most government debt per capita at $90,000 odd. Do you remember the banking bust of Ireland? When the lying fascists who run Ireland decided to bail out their banks rather than letting them go bust, and of course bailed out all their mates, their property developers, you name it. Ireland has the second highest amount of debt per capita. United States is the third, and United Kingdom has the sixth highest at $53,000 per man, woman and child in the United Kingdom. $53,000. The average for the OECD is just less at $50,000. Well, that's good, isn't it? That's lovely, isn't it? Who's got the least? Indonesia, Estonia, Russia, India. China's down there at $7,000 per capita. India's $4,500. Mexico, $9,500. Do you think it's likely that with the likes of China and India having just themselves something like 30 or 40% of the world's population, do you think it's likely that with relatively low debt levels held by the government, that they might do quite well in the 21st century? Where are you putting your money in your pension? The US or the UK? Or China and India? Now, I did write down something. Is it to talk about? No, it's to talk about later, so that's perfectly fine. The next is a very interesting photo of an advert from a BMW dealership. BMW of Greenwich. No, not Greenwich, London, but Greenwich, Connecticut, where all the hedge funds are. All the hedge fund billionaires and multi-millionaires. Connecticut is where all the hedge funds are. Make it a BMW summer. The timing has never been better to make it your summer of BMW. 0% financing up to 72 months on a new 2017 and 2018 models. 0% financing for up to 6 years on a sharply depreciating asset in Greenwich, Connecticut. Imagine what it's like everywhere else. Now, still in economics, look at that very interesting long-term chart, which they call the wage growth tracker. It's showing the 3-month moving average of median wage growth, and the dark line is indeed overall. They also show by different strata in society. And this comes partly from the Bureau of Labour Statistics, which is the officials, and also the author's calculation at Northman Trader. Now it's very interesting. Moving average of median wage growth rose 97 through 2000. Then you had a dot-com crash. Then from 2004 to 2007, 2008, then you did the banking collapse, and wage growth had been rising from 2009 to 2016. But it's still in the rising channel, as you can see. But the simple fact is, in the last 2 times that the wage growth fell down out of the rising channel, you then had huge recessions. I am not saying that it is going to break down out of the channel. I'm saying that it's heading very rapidly to the bottom of the channel, and if it breaks down, I think it's pretty obvious what's coming. The fact is, we're close to the bottom of the channel right now. At about 38 minutes, let's move on to markets. And I want to make clear that I don't know the future. Funny that, isn't it? You're really surprised to hear that. The fact is, no one knows the future. And as much as there are indicators out there that suggest we may be moving towards when we can say a recession looms, and you know that that's what I've been saying week after week, month after month, nobody knows. And I've been the first to say that a recession does not yet loom. And, you know, you've got to consider whether or not we're actually going to see a recession in the relatively near future when you see a chart of the FTSE like the one that's there. It's a very long-term chart of the FTSE, and it shows very clearly after 3 attempts, the FTSE broke out above all-time highs earlier this year. And it's still above there at roughly 7,500. And, you know, stock markets aren't stupid. And they might well know something that we don't. And the fact is, the FTSE is a very important indicator of what's happening in global markets and therefore what's happening in the global economy, in the sense that markets are a forecasting mechanism. So, you know, you pays your money and you takes your chance, etc., etc. So we have to be very even-handed and not say this is going to happen or that is going to happen. What I can say is the equity markets believe that everything's okay right now. And it's very important we bear that in mind. Another thing we should be looking at is the future investment opportunities. And I'm fascinated by the Chinese internet stocks. You know, the equivalents to Amazon, to Google, to Apple. And you've got the likes of, well, you know, it's the greatest company name on earth, JD.com. There isn't a company with a better name. You've got Tencent, you've got Baidu, you've got Alibaba. Baba is like a business to consumer Amazon. JD.com is like China's Amazon. Baidu is China's Google, and so on and so on. And, you know, some of the brightest people on the planet have said, and I just accept it because I can see the demographics, I can see how incomes are growing and so on, the consumer is growing, blah, blah, blah. They're saying that Chinese internet usage is going to rise 25% a year for the next 25 years. I can see it. And when you look at the index of Chinese internet stocks, the charts there, it's up 60, 70, 80% over the last year or so. And they're just going from strength to strength. They had a couple of years of getting going. People were getting used to them and, you know, not quite aware of whether or not they were going to make it. They're going to be taken over by the government or whatever. But you know what? These guys are smart cookies. They are doing phenomenal business. I'm told you can even go on the Alibaba website in English and you can buy things dirt cheap. You have to wait a month for it to come here, but it's even cheaper than Amazon. Of course, there's no way you can return it, but my goodness, it does make you think. So, I'm not investing in it myself right now. We're quite sufficiently exposed to emerging markets generally, but if there's a sizable pullback, correction, even crash, I dream of a short-term crash, I'll be buying with both hands full. I might even buy high, because there are some things where I will allow myself to buy high. For example, in November last year, within days of the Trump election, we saw, just like at Brexit, we saw shares suddenly go down and suddenly go back up again. We went heavily into global equities at very high prices. It's done us very handsomely, thank you very much. Gold, of course, is something I've been talking a lot about, particularly the last few weeks. Let me remind you that at circa 1300, for a couple of weeks, in fact for a few weeks, I'd turned short-term bearish, and sure enough it came back down to just over $1,200, and the same for silver and the same for miners and so on. And at 12:07 I tweeted and I said to you that day, if you are the type of person to go short these things, close your shorts, because the downturn has ceased. Now, of course, I didn't know that, but that's what I could sense, that's what I could see looking at what I was looking at. And indeed, I bottom ticked it, which was very interesting. When it got to the 1230s, I was not very comfortable with the bounce. And I was, from 2 weeks ago today, so what would that have been? So it was, beg pardon, it was the 10th of July that I said, close your shorts. 1 week ago, the 17th of July, I said, I'm not comfortable with this rally. And sure enough, by Friday, it went up to just short of 1260. I remain not comfortable with this rally. I can see the dollar is going to have a short-term rise. Now, if you've been listening or you have listened to the very first Booms and Busts shows in early March, one of the very first focuses in the markets that I had was the dollar's going down. The dollar is medium-term toast. The dollar index in January was at 104. This is the index against a major basket of currencies. By March, it was still 102.5, so it hardly moved. But I was very hot, very focused on, that's it, I tell you, expect to see the low 90s, maybe even the high 80s. Bearing in mind, the dollar was still in a very strong uptrend at this point since 2016. And sure enough, the dollar has now been down to 93.5 on Friday there, Friday the 21st of July. But I will post a chart which shows how the dollar soared in 2014 and has actually essentially been flat since early 15 to now, nearly 2.5 years. It broke up above the horizontal channel in December of last year and promptly came back down. It was a failed move, and from failed moves, we tend to get much sharper, harder reversals. And that's certainly what we've seen with the dollar. Now, the dollar is now more or less back to the bottom edge of the channel. It's very likely to bounce here. Perhaps up to 96, 97 maybe even. This is not going to be positive for commodities and gold. I'm still looking at the high 1100s for gold. I could be talking totally out of my elbow, but that's what still seems to me. From $12.60, just under $12.60 an ounce, I think we're going to go back to $12.30, $12.40. That will be the tell. It's likely to happen this week. I mean, we're only talking, after all, $20-25, which is nothing out of 1,200. I mean, literally, it's a rounding error, but that's what we're looking at. I just wonder if it's going to hold at the mid 1230s. I just wonder, and I think there's going to be another $50 to go down. There's lots of bulls out there who are slapping their backs. Well, you know, as I say, I said close your shorts at 1207, which was exactly to the dollar correct. I'm just not comfortable. I don't see that we're seeing $150 rally from 1207 that many are seeing. I think we'll get a $150 rally, maybe even a $400 rally if we get to the high 1100s. But, you know, let's just watch and see. If indeed we go up to 1235 or so, and then we rally back up, then post 1260, fine. It's going into the high 1300s, and that's fine. That'd be perfectly comfortable as far as I'm concerned. There is a very long-term chart of gold against the Huey, which is the gold bugs index, basically gold miners. I think there's a bit of silver miners in there as well. And you can see the rally in gold relative to miners from 2004 to the end of 2015. When gold rises ahead of miners, it doesn't mean that they're both not rising. It means that gold's rising faster. And similarly, it doesn't mean that they're not both falling. It means gold is falling slower. Well, you know, that's a bear market in precious metals. because miners leads gold, not the other way around. When you see miners rising ahead of gold, you want to be in the market, and vice versa. It seems to me that we're likely to see the price fall back down to the lower trend line, down to say 6.2, which is bullish. But then we'll see the market rise up to that circle at the top, or the oval, hugely bearish. Well, over the next couple of years. Well, we'll see how it goes. Just let me remind you that 3 out of the 4 precious metals are still below their 200-day moving average. Platinum, silver, and believe it or not, I've forgotten the other one. Of course, gold is the one that's above its 200. This is not bullish, chaps. It's not bullish. Very interesting about stocks generally. You've got retail investor cash is down to 11%. I might have covered this in a previous show. When you see retail investor cash down, it means they're heavily invested in the market. Well, the last time they were heavily invested in the market, there was a 15% fall in the market, and before that, it was the middle of 2007. Well, pay your money, take your chance. Still seems to me that we see general inflation, which is not actually good for gold. Copper has been rising dramatically for a year and a half. It looks as if it's about to break up to the outside, to the upside. This is huge. If it does, you got confirmed inflation, listener. Quotes: "We will not have any more crashes in our time." Keynes, 1927. "Stocks have reached what looks like a permanently high plateau." Professor Irving Fisher, 9 days before the 1929 peak of all peaks. Over the next 3 years, stocks fell 90%. "We've never had a decline in house prices on a nationwide basis. So what is more likely is that house prices will slow, maybe stabilise, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path though." Ben S. Bernanke, who at that time was a member of the Federal Reserve Board, the interest rate setting committee, from 2002. By the way, he said that in 2005. He became the chairman of the Federal Reserve in 2006. US house prices nationally peaked in 2006. Over the next 3 years ago, they fell 50%. Don't expect another crisis in our lifetimes. Quote, unquote, Janet Yellen, the chairman of the Federal Reserve, July 2017. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, of which I have absolutely no way of knowing the future. None whatsoever. The 3 most important words in investing are, I don't know. Any huckster in financial services who tells you they know the future, run a mile. All you can do is look at what the market is already doing and go with the flow. Anything will and can happen. I will not be back in your machines, in your computers, in your mobile devices until the end of August. I have so enjoyed the last few months of doing the Booms and Busts show. I have so enjoyed receiving and discussing your comments with you. Keep sending them to me. I will, of course, still be on Twitter. I'll still be watching the markets. I'll still be making comments. I just won't be recording the Booms and Bust show. I wish you all an absolutely fantastic rest of July and August. I've had a blast. I'll see you when I see you.